This is not financial advice. I'm documenting my thoughts about SoFi, which is a high risk, high reward stock. SoFi wants to be a one-stop shop for all the financial needs of not just individuals but other small neobanks. Being a one-stop shop has advantage with respect to cross-selling. For example, if they gain me as a customer by offering me $300 to open a direct deposit account with them, I will open it. But then if I use any of their other products like SoFi loans or buy stocks with their app, they're gaining money from me, but there is no additional customer acquisition cost. Right? Let's look at their financials. The stock is currently trading at about $6.1 with a market cap of about $5 billion. When I look at their revenue for the past 12 months, they made about $1 billion. So that's a price to sales of about 5, which is actually cheap. But when I look into the net income, it's negative 400 million. So they are losing money a lot, right? But since it's a growth stock, we can tolerate it as long as they can make a lot of profit in coming 4 to 5 years. One thing that bothered me so much is their stock dilution. In 2020, they had only 74 million stocks, but today they have about 800 million stocks. So now let's discuss about their business model, and I'll discuss about a simple evaluation and another complex evaluation to see where the stock price will be in 2025. SoFi's business model has 3 different revenue segments. The first one is lending, in which they offer student loans, home loans, and personal loans. They're only growing at about 14%, and their net profit margins are below 15%. The second one is financial services, in which we can do money transfer, stock trading, crypto trading, etc., etc. This is a faster growing business and has slightly higher net profit margins, so this is a little exciting business. The third and most exciting business is their technology. They acquired Galileo, which is a digital banking products company, and Technisys, which is a banking software company. So both of these acquisitions are really expensive. They paid $1 billion each for these companies, and these companies are barely making about $100 million of revenue. So they paid a price to sales of 10, which is really, really expensive. But if they succeed in future in getting a lot of business, then the purchase will be worth it. So the technology is very high margin and very high growth industry. So if they grow, we would hope that they would grow in this sector more. Let's look at a simple evaluation for 2025 first. They are promising to grow about 50% this year. So if they can continue the same 50% growth for the next 4 years, they would make about $5 billion of revenue. With a net profit margin of 15%, they will make about $750 million of net income. With a multiple of 20, they would be worth about $15 billion or $17 per stock. That's about 3x in 4 years, which is a very attractive gain, but there is a lot of execution risk in it, right? So let's look at the more accurate and complex estimation for 2025. The $5 billion of revenue that we have assumed for 2025, let's say if they make $3 billion of it in lending, $1 billion in tech, and $1 billion in financial services, we're going to assume respective profit margins. Lending 12.5%, 25% in tech, and 15% in the financial services. Now we calculate all the respective net incomes, and lending business is the boring one, right? So it gets a lower multiple of 15. The tech, which is a more exciting business, gets a multiple of about 25, right? So when we value these 3 businesses separately with their respective net profit margins and respective multiples, again, we end up with $15 billion of market cap, right? Which translates into $17. So this is again a 3x in 4 years, which is a very attractive investment, but there is high risk, which is why I only took a $1,000 position at this point. But I'm going to follow this company and see their execution. Are they growing more? Are they growing less? Even if they are growing more or less, I want to see in which sector are they growing their revenue. So